All right. So now we're actually recording. So the topic of today was the liquidity. I will also cover the way I see liquidity into the range. So basically, you're not gonna have any more doubt on how to spot liquidity and when a range has already taken out all the inter-range liquidity. Right. So the main form we're gonna be focusing are highs, lows, equal lows, triangle liquidity, right? So these one are the main type we're gonna focus. I'm gonna break this down, all of them for you and the way I see them. So let's begin with highs, lows. When we go over, let's say, and we first see the market, we have the structure. Now we all know the highs and lows basically has liquidity above and below them. There are stop losses and orders resting above and below them. Now, that may seem way too tricky because since the market is fractal, we're not only going to have, let's say, this low and this high right here. We're also going to have structure inside. And now we can say, oh, there are also lows inside. And even inside these lows, there are going to be more high lows, right? That can be a lot confusing. And we're also going to cover them when we're going to apply all of these concepts to the ranges, right? So what we're going to look to are basically three candle formation, right? To me, when we have a break structure, like for example, that one, from a three candle formation right here, that's a high. There are stop losses being built. I don't care pretty much to all the price action that there can be inside, since if you focus on everything inside the price action, you will easily get lost because you'll try to break down pretty much everything inside this leg and you will get so easily confused, right? So when we look to highs and lows, I will only consider major swing points, so basically major highs and major lows. That's the one I will focus on. You can take even every three candle formation inside, and that can be a high or a low, right? So for example, if you set three candle formation right here, that will be a low on a seconds time frame. But yeah, that's valid. That's a form of liquidity, right? So the main one I will focus on are basically major highs and major lows. But also you're gonna see me taking, well, let's say I'm taking a trade. So let's say, for example, I have a strong low. I have, let's say, a high. And right here I have a three candle formation. But my target is up here. I can take it to go long, right? Because that's a strong low on a lower time frame. But also that can be liquidity. Because remember, we have two ways that we can use the three candle formation, liquidity and structure. Now, as we talk about BOS and fake BOS, when we cover structure, there is anything that can actually become liquidity or structure. You don't have, let's say, a reason to spot it when you look to the actual structure, right? Because in reality, you will have, let's say, a QM and a QM, and then you have, let's say, these three kind of formation. When you look to the chart, you have no indication if this is gonna hold or this is going to be liquidity, apparently. So you have to build a context. So let's say if you already took out external range liquidity from up here, that for me is liquidity because we already take out external range liquidity from up there that can be seen, let's say, in form of buy stop and sell stops. That's the same thing. So I will expect this to get taken. But if, let's say, the overall target is still up here, I'll definitely take it. But in the overall, that's the same three kind of formation. Didn't change the form on the way it actually look. But that's the logic we put behind, right? So that was a little insight when I look to the actual market structure. Now I won't cover why there is liquidity resting above and below, right? But if we follow basically the main logic behind liquidity are areas where traders relieve their stop losses and orders. So basically, there are breakout traders, support resistant traders, all interested into these areas. And now we have to add all the people that trail the stop losses above and below. Let's say, for example, let's say you're bullish. We used to, let's say, trail our stop loss below a low, but obviously we are not alone. Tons of traders do this. And also a lot of traders expect this low to get taken to get, let's say, some form of sell stops to actually get in. So that's why they're basically major areas of liquidity. So that's the main logic that drives them. This can apply to every form of liquidity we're going to cover. But remember, above and below every single high and low inside the market, that can be not only three candle formation, but basically every single week there is liquidity. But when you go to the chart, let's say, for example, this chart right here, and you have to think where liquidity is. You cannot, let's say, go and think, oh, below every single low, there is liquidity. That's true. And that's obvious that below every single low, there is resting liquidity. But you cannot, let's say, go even further and let's say you drop to the 15-minute onto whenever low time frame, and you just apply the same exact logic to every single low. Because you're gonna end up right now understanding that there is liquidity below here because that's a wick, so that's a low. And that can be correct because in reality, everything is liquidity. The reason, if there wasn't liquidity, market will never come because every point is made by liquidity. Everything is liquidity into the market. And if you get, let's say, this high liquidity, this low liquidity, everything is liquidity. And you cannot look like this and say, oh, everything is liquidity. So if price comes above here, that's all right. And even let's say if price drops, that's all right. You're not gonna build knowledge. You're not gonna build a strategy like this because that's basically you over justifying whenever price come. So for example, if you have to think in this way right now, where price will go to the high or the low, you can't have an opinion because everywhere is liquidity, right? So that's not how we see liquidity inside of a range or whatever inside the market. Now, there are equal lows. Now, I prefer, on my personal experience, to see them as two couples of three candle formation, basically. So let's say, for example, I have something like this. And let's say this low right here. That's a three candle formation, right? So all of them for me, since they're pretty close, I will just call them equal lows. That's my way to see them. Now, they can be spotted in different ways. So for example, that can be one that is just a wick, and then you have a three candle formation right here that basically mitigates the previous wick. And these for me are still equal lows. You can spot them are basically just two wicks. Let's say something like this. Hold on, something like this. They are still equal lows. The best way I can spot them is like this. So basically that's a low, that's another low, equal lows, right? But also you maybe see them and me taking them on this actual perspective. But if I can, let's say, drop a few time frames and see them in this way as two types of three candle formation, I'll definitely like this because for my eyes, they're much more cleaner. I can understand what's actually going on, right? So the main logic behind equal lows and equal highs, they has to be close. Now, a lot of people like to take them in this way. So let's say you have a low, and you have a low, let's say you have a QM, and they call them just equal lows, right? There is no point to me to call them as equal lows because they're basically too far away from each other's, right? Imagine there is liquidity resting below here, and let's say here is all empty. Now, why they should be equal lows? They are two lows, but they're not close. They has to be close to be considered equal lows, right? Because in a realistic scenario, you may have the opportunity to actually catch a long. Let's say that's our range and price has fulfilled his overall cycle. You may take, let's say, some form of counter trend. Meanwhile, all equal lows, price will just break through all of them, right? Because they are close. They has to be close to be considered equal lows. And the third form I like to see liquidity is basically trend liquidity. So basically, instead of two lows, three lows. You may see them sometimes as three types of three candle formation. So something like this. And that can be spotted as something like a trend line. You may see in different ways. Like for example, the first one is a three candle formation, and then you have lows made on a pattern. But the best way that you can find it, and that will make sense for your eyes, will be seeing something like this, right? No matter how do they look, if they're just wicks or three candle formation, they make sense to be a trend line. Remember, in order to see equal lows and trend liquidity, they has to be close. There is no point to come if, let's say, there is a huge gap between them, right? So before jumping on how we can apply them to ranges, I'm also gonna give you some kind of examples on the way I see them, right? So let's say we drop to the 15-minute. Now, all of this to me, that can be seen as trend liquidity or equal lows. Now, you see that these two lows, they're pretty much close, right? And let's say even to that one. They are all close. These to me are equal lows, right? Let me actually zoom in to make it better. But let's say if you have to take this one and that one, and imagine that inside of here is empty, they wouldn't be to me equal lows, right? They can be seen on a perspective if I have to, let's say, catch a pullback by hedging. But if I have to look, for example, internal liquidity, price will never come here, right? If inside of here is empty. Now, obviously in this scenario, price has a reason to come down there. Is all liquidity. There are all surpluses and orders being made down there. So that's why price came pretty much straight and then gave a reaction. Now you can take pretty much every highs or lows. So for example, that's a high, that's a high, all major swings to me. All of these are major swing points. When they're close, you can just like to call them, let's say, equal lows and equal highs. Like for example, these two equal lows, they're pretty much close. And even if you look to the mitigation, they're all mitigated. They don't make sense. The price can come into them. All of these equal lows, that can be seen also some weird of internal liquidity, or let's say terminal liquidity. My bad. And yeah, for example, all of these terminal liquidity, they are all close to each others. And even let's say the higher here, building up more liquidity. See liquidity into the market. You don't have to look for patterns, right? Don't think that you have to look for a specific amount of patterns in order to spot the liquidity. Obviously, you have to look for three kind of information and highs and lows, but you have to be flexible. You have to be able to adjust your eyes to where the liquidity can be, right? So even if you check to multiple time frames, now you understand why price reacted here and didn't just go straight to take all of them. Remember that you have to build a perspective when you look to the market. So price took out these two equal lows right here and gave a reaction. If the low was close, so for example, was right here, that major swing point, price will just took it. But if it's far away, price can use it in a form, let's say, as an obstacle to give a reaction. That's another way that you can use obstacle. That's not my style, but that's the reason that price reacted from, right? So basically price took that out. That's a low, that's a three candle formation. And that's why price took it and gave the reaction. So that's the way I like to see liquidity. Now remember, the way we see liquidity is not the actual way we have to see internal range liquidity. And that's I'm gonna jump straight into the way I use it. Now we all know that the range cycle is basically external range equity and internal range equity being built inside. The cycle is internal to external, right? Perfect. So let's say there is stops being built here, let's say equal lows, and then there is a low down there. Price to me doesn't has a reason to come and take out this low, since here is empty, right? That makes no sense. But what let's say may happen is just price take out this low out, these two equal lows, gave let's say a reaction, fails to take out the previous high, and now price has a reason to actually come and take this low out, right? That's the only reason. That's why when you have huge gaps, basically areas with our internal insecurity, usually you will see price doing this. Come and take. And you'll wonder why price didn't came to this area. Let's go over a chart example that happened recently on EU. Let's go from the 4-hour. You have your external insecurity getting taken from our previous BOS right here. Now, where is liquidity? These one are equal lows, right? That can be seen, let's say, even a form of trend liquidity on lower time frame. The important thing is not how you call this. The important thing is like you understand that this is liquidity and this should get taken. But right after price makes the QM, here is empty. There is no reason to price to come there, right? If there isn't liquidity, there is no point to come because you're gonna see liquidity everywhere. And that's the thing. I was stuck a lot because I was seeing liquidity being built here, here, here on every single time frame, right? So if right here there is a gap, price cannot come. So what you should do is basically T1 or T2. We are gonna cover them also, but remember that. That's why price when came into here and there wasn't internal insecurity being built, form a T2. Failure swing, took it out and go. No reason to come down there since it's empty, right? So that's how we can use them when we look to ranges. Now, since it's very important, you have to use timeframes. Now, this will cover everything we're gonna talk about. So for example, this will cover market structure, liquidity, POIs, T1 and T2. You have to use timeframes. The way you can use them is this simple. I always show this when I call, let's say, when I do a mentorship call, because that's the easiest way you can use it to understand the market and his own perspective, right? You have to imagine that you're onto this museum and you have to look to this big paint, right? And you're gonna start position yourself right here, right? Now, you're not gonna be able to see the whole paint because let's say is way too bigger. So you're gonna see just a side of the overall paint, right? Now, the other thing you will do is just you're gonna place onto another side. And let's say on this side, you'll see only these parts right here. Now, what's resting, you're gonna move in the middle to see the rest of the paint, right? Remember, the paint never changed his sizes. What was inside the paint always rested like this. But you see different things, you see different sides, and in the overall, you understand what was this paint about, right? Remember that is so important that you never change the paint, but you just change your perspective to build what was inside this paint. So when we look to a range, let's say, for example, this range right here, we don't change the range when I go, let's say, to the 1 hour. The range is still there, never move, even by a pip, right? It's still there whenever time frame I go. It's still here. The only thing that I change is my perspective. That's why we cannot build an analysis only onto a time frame. Because let's say, even if I look to the daily, I see a 3 candle formation and I see a 3 candle formation. But I just see upside of the whole paint, of the whole range. So what I have to do is just I have to switch my perspective going onto a lower or onto a high time frame, right? Now I see another side, right? I can do this multiple times until I understand what's inside of this range. And that is so important that you guys understand. Now there is only a scenario I will use only a single time frame. And that's when I have to look for re-entries onto the 1 minute. Because let's say we scroll down to the 1 minute time frame and we go over, I think that was just down here. Yeah, for example, this range right here. Now, I don't use seconds. I don't recommend you at all to use them simply because you're going to involve your thought much more faster. And this can actually distract you and take wrong decision because you'll have a less amount of time to think, but you can do it too. There is no difference between the strategy. The strategy works on every single time frame, whatever is seconds or months. And the main thing I can look for here is basically price, make the low, broke structure, retrace, broke structure again. So that's basically T1 for me. If I have to look for a POI, let's say onto the 5 minute, I have only a block right here. Because sometimes you'll come across the example, I cannot come and take this thing, right? So let's say I hesitate because I don't feel confident about taking this setup right here. So what I can do is basically look for a reentry when an opposite QM is formed. And let's say right here, I see a low, break a structure. Now, since is very important, and you guys already mentioned onto the question. Now, this to me is a high. Is not a three candle formation, but I understand the price broke structure, made a retracement, broke structure once again. Right? That's just my common sense. That is much easy to see to me, even if I don't have a trick and information. Now, you may see this sometimes that I took it as liquidity and sometimes even a structural point, and there it is, because it's not important the way that it looks. It's important the logic behind. That's a pullback to me. Broke structure, retrace, broke structure once again. So basically made a high, a low, a high, and another low. So that's a high to me. I might take them even when, let's say, there are no wicks, it doesn't matter, or even if the wick makes equal highs, it doesn't matter. It's all the logic about. If you're kind of starter with the way of seeing structure and liquidity, I understand if you don't see this. And that's all right. You don't have to force your eyes or your mind to see. Even let's say if you don't understand why this will be a setup, don't just overthink in a point that you think, oh, I might understood. If this just doesn't click into your eyes, into your mind, that is, oh, that's a T1, don't focus way too hard because maybe it's too hard for your mind and your eyes to see it right now. Start from easy examples, start from easy chart breakdowns. I know you all want to do ping pongs and understanding because that's fun. That's a lot, let's say, engaging for yourself and your mind. And that gives a good feeling when you actually do it. But if you're not able to understand a range and all the component about the range cycles, don't think you're gonna able to do ping pong, right? So for example, I'm on the 1 minute. As you know, guys, I don't use a custom plan because it's not needed if you want to trade, and you can still take a lot of trades even only onto the free time frames. So that will be a range for me because that's ABOS being built in right here. So now I have a low, I have a high. Now you can use ranges with the QMs. So basically we used to see ranges in this way. And when I catch a high probable setup, I must have two QMs. That's for my trading style. I must need QM for me, but you can even take them if you only see three kind of formation, that's fine. Because onto a high time frame, a QM is basically a three candle formation. But you have to be aware that you will see this onto a high time frame perspective instead the QM, always, right? So you cannot say, oh, there is no internal range liquidity. You don't know because you are on a high time frame perspective to see a range. Right, so now remember that we are onto the 1 minute, and let's say our target is a 1 hour high or a 15-minute high. Let's say we want to get this high out following our overall bias. Now, I am fine to take the whole range to act as a PY because take it as structure. Price took out the internal, has to go to external, right? So I can feel fine to just take the whole block like this and just execute my trade. That's fine. I can even decide to take this block and miss the trade, or I can even, let's say, decide to use this amount of body and enter right here. I can do whatever I want when I want to catch a trade. Now, I don't suggest you to follow, let's say, your instinct and your knowledge because you don't have that experience to do it. And I don't do it too because I like a systematic way of trading, right? That's why I use POIs. I don't use the exact way I wrote writing the strategy, right? I don't do anything that is not mentioned onto the course, and I don't, let's say, explain. There are no secret following my trading style. I just do raw ranges for a trade, right? So I will avoid personally to catch the trail, but that makes sense because you will do the same thing onto a daily, but simply on the daily, you will scroll down a few time frames and find the reason that where price reacted here. But now you feel scared because you're onto the 1 minute, but it doesn't make the difference. Because let's say if we zoom in and I tell you which time frame is this, you will never take it. And if you know you're bullish, you say, oh, you're fine that price reacted here. You may say yes. You don't need, let's say, always price to come here. You don't have data about what happened inside, right? So let's go also over ranges. Now, the way I see the market, and that's the way I suggest you to see it, is between internal range equity and external range equity. But in reality, that's the same thing that we do with buy side liquidity and sell side liquidity. That's the same thing. Now we change our way. It's basically the terms by call them internal and external range liquidity, right? So basically, all right. So basically, you don't have to overthink because maybe onto a bearish example, let's say you will have buy side and sell side, and onto bullish side, you will have sell side and buy side, and you can get confused a lot along the way. So we remove this step and just call them internal, whatever is internal of a range, and external when is external to a range, right? So basically, when you have a range, that's internal. Now, the market isn't, let's say, forced to fill the overall range, right? So doesn't has to come to take out all the internal range liquidity that is going to be seated all the way down. Can just take out the major swing points and just go. Let's say you see all of this form of liquidity being built here, and price can just take some and go. Price can even then take any internal range liquidity and move up. The range can do whatever he wants, right? And you have to understand it. You cannot force the price. Now, obviously, if you try to counter trend, and let's say you want to take a short right here, that will be a stop loss because that will be a counter trend. So for example, how you can actually do this. Now, the main thing I will look for when I have to trade are major liquidity points, right? So if I see, let's say, as I mentioned, liquidity and then a gap. Let's say right here, that's a gap, and right here, that's other liquidity. I can just, let's say, if I feel that I want to take an aggressive trade, to just try to take out a long right here. But remember, this liquidity has to be a lot away, right? And then try to take out the high of, right? I can take the risk if I feel, let's say, to take an aggressive trade, right? That's not the way I trade because personally, if I have to take it like this, I will exit 100% right here to the external. And that's what I recommend to all of you to do, right? I recommend all of you to exit always to the external range liquidity. And if it doesn't, let's say, meet your risk redeem terms, for example, you trade like me, so do you want to exit a trade if it's not a 105 or let's say a 104 if it's very too high probable, don't take it. Don't force yourself to take setups. So that's why I will always exit right here. But if I want, let's say, to swing or let's say catch more risk redeem, I will try to take this high out. But that's not high probable because if price comes to your target, you will be fine. But let's say price just stops you out to do something like this, you will never understand why you get stopped out. Right? So you say, oh, that's because price will come here. And maybe yeah. But what will happen if price reacted here and go to the target? You will never understand. You will be stuck onto your current level. And that's the fear you should have when you're actually trying to learn this strategy. You have to put yourself into a scenario that you take action, you take a decision whenever it is. Because a lot of people can be questioning way too hard when you look to a range. Let's take, for example, the current price action on EU. Now, a lot of people can get confused about where we are in the market because maybe price, let's say, came onto a high time frame PI and maybe now will drop because this can be, let's say, a QM, inducement, taken and drop. And others can see, oh, that's a bullish breaker structure, that's internal, and it won't go on. You have to take a decision. Which one will you see? Now, don't think that just because price came here has to go up, because if the bias is bearish, that will be a nice short. If the bias is bearish, right? So don't force over yourself to actually think like, oh, price is near the high, it should take it. It's not actually how it works because you're getting induced if you have the wrong bias, because that's what all the traders thinks, that what goes up, it should just go up higher, but that's not how the market works, right? So take a decision. Don't think, let's say, for example, this one, that's a BOS, right? That's three candle formation being broken. That's a BOS. Repeat it to yourself. That's a BOS. That's not a sweep. That's a BOS. Why? Because we are on to a bullish market structure. That's a BOS, right? So don't think it may be a sweep, it may be whatever. You see this, that's a sweep. That's 2 cow liquidity. What is this three candle formation? That's a liquidity. Broke structure, that's a strong low, or whatever is a QM. You might hear me a lot say strong highs and strong lows whenever they're not strong. My way to call a QM are basically strong as strong because they are all strong in different perspective. So it doesn't matter. So that's a low in the overall. That's what it is. You have to be confident. If you're bullish and that's a break of structure, this high, whenever forms the QM, will be weak. Even if price drops here, don't have the fear. Take a decision. If this is going to be a bullish range, where price will come into, take decision. Don't get, let's say, in a situation that you have way too many fears of, let's say, being wrong because your experience come that, oh, you always had the wrong bias. So basically you're getting stopped out over and over. And basically you find yourself in a situation that, oh, this has to go. But following my experience, every zone that I take, it fails. It's not gonna work. You're not gonna build a profitable trader. 100% that's not gonna work, right? So that's how it's going to be. Now let me actually read questions real quick because I see, yeah, Valley QMs also without a body close. Yeah, I don't care about body close and candle close. The only thing that I see is the logic. But let's use a little bit of common sense. If you find, let's say, this high as a BOS, that's a tiny movement, right? That can be, let's say, something weird about the market. But if I see a breakout structure like this and I see the market pushing a lot above, this will create me confidence, right? Because remember that basically T1 we used to see when we have a tiny BOS, right? When we have this tiny BOS right here and market doesn't go too far away. So if market push a lot away, that can be a sign it's just a genuine BOS. Don't focus way too hard on this little thing. Like for example, candle close, BOS, etc. Or basically even when a markup highs or lows. Focus on the logic, right? So that's the main actually advice I can give you if you actually struggle with all of this. Because it's not, let's say, a game of PIs. If you're getting stopped out constantly, it's not because you're getting your PI wrong on 99% of scenarios. It's because you lack your understanding. It's just, let's say, oh, if I take, let's say, this hidden base right here, why am I wrong? It's not your actually PI wrong, it's your understanding because that was liquidity. You have to tie up all together. If here there is a gap, there is no point that price will come here. And if price comes here, that will be to take out the liquidity. Right, so that's why sometimes you'll get stepped out even if you have the right bias. You simply get induced because you have fear of losing that moment. Right. So to me, to have a hyperable setup, reconnecting to the argument I was saying, I prefer always all of the internal range liquidity to be swept, right? So if I have my range and I have, let's say, here internal, etc., I'll definitely wait this area right here, 100%. Now, I'm not gonna counter trend till here, obviously. I'm gonna counter trend, let's say, till here, if here there is a gap. What I will look into is just this setup. I don't care if the price doesn't come, that's not on me. I will mainly like to execute directly right here. But why sometimes price doesn't come here? And I'm gonna explain you why, but we're gonna see this onto live example. I'm gonna cover all of these per section. Let's say we take it from here. You may be tricked because you see price taking out the liquidity and then price seems to never do a pullback. But why price never do a pullback? You have also, when you have a trading range, to tie up T1 and T2 because sometimes price will just take out the inducement made by one of them and just fly up away. Like for example, let's say right here, you have a breaker structure from that kind of formation. Now, a lot of people saw this as tons of liquidity. For example, that's a high, that's a high, that's a high, and that's true. They are triangular liquidity being built in. But when I look to structure, all of them, I know that's basically a high. That's all of this. That's why you saw them onto the 4-hour as basically a three kind of formation: a high, a low, a high, another low. That's all in one move. But when you go to way too low a time frame, you will see a lot of price action, right? So if you're trying to actually anticipate a pullback, let's say between some highs or lows right here onto some lower time frame structure, that's why they'll never happen. That's basically a single structural point and there is liquidity pretty much everywhere. Market will often do where market will actually, let's say, take the whole internal liquidity. Or there is, let's say, a gap, for example, right here. Price took out the internal, some couple of liquidity, there is a gap, and that's where price will do a pullback to actually distribute, build an inducement, and build, let's say, equal lows if market went to go up there. Right, so let's go over this kind of structure. Once you have a range, I suggest you to see if there is a T1 or a T2 type of inducement. Because if you see this type of ways, when you actually look to the structure, you will also have much more clearance or where the highest probable level that market will come into. Right, so let's see even to the 15-minute. That will be it. So yeah, that's news, but I don't care. Pretty much surprise. Made a straight move right here. Retrace, taking out even a couple of structures. That will be a strong low. And broke structure again. Now, this to me, that's T1. That's the pattern we look for because we have right here a strong low, and that broke structure. All the inducement is being built right here. So I understand that right here, that's a gap, right? There is anything resting. Obviously, if you have to look for, let's say, only way too higher probable setup, but low probable, you can just take this order block right here. And that's actually fine. So basically, there is anything wrong. There is anything wrong to wait for this setup. Because if you, let's say, want to only cut the highest probable setup, if you get up there, take it from here. That's right, but understand if price doesn't come here. You can gather confluences even following the daily cycle. Like for example, here, that was Asia. And Asia closed a strong low, so there are high chances that this will get respected throughout the day. And that's actually all confluence that will make you understand to actually basically take the long out, right? Because you have this simple pattern, take a liquidity broke structure, come, retrace, broke structure once again. That's T1 right there. Now you can just take the whole PI. Now, since I'll mention on how do I select a PI, now you can select PIs in the way that you want. I traded for more than a year and a half without utilizing PIs. I will just enter straight to the key level. So for example, let's say this one was my key level and I had a statistical stop loss that can be, let's say, in this case, I want to risk, let's say, 4 pips, or let's say I want to risk 1 pip, 0.2, and get stopped out, right? I saw this as a matter of risk without having way too logical areas. And you can do it too. But when you apply POIs to your analysis, it's just a game of risk. It's just what would you risk to actually take the setup. So let's go over, let's say, the 4 hour, where you see closest period is the inducement. You have this wick or this hidden base right here. Hidden base is closer, so we're gonna take them. You're gonna break this down, and this was my entry. Now you can line this up to whatever thing you want. You can even go, let's say, to the 1 minute right here and just take wall length up to it. So that will be this block right here. You can take it from the line, and that will be your PI. This is correct if you want to line up to this. But as you can see, you'll get stepped out and price will go. It's not because your PI is wrong. Because remember, we don't go over PIs. We don't think that the market bounce between PIs. That's not how it works. And if you believe this, that's because they are lying to you. Market doesn't float to a PI to another, right? PIs are just meant for us, right? That's where we has to place our entry and our stop loss. But if you get stopped out, doesn't mean because your overall bias is wrong. Because what the rain cycle tells us is this low is strong, this high is weak, and will get taken after the inducement or the internal range liquidity will get taken. So this has anything to come from your actual way to see this. Now, I see tons of people using Thai stop loss like this, and that's a good choice. I cannot say, oh, this is wrong. This is not wrong. It's correct. I don't like it personally because I'm just more a conservative person. So if I have, let's say, all of these right here and targeting the high already gave me a 105, I'll take it. Because for me, this low shouldn't get taken. And I'll honestly take it like this. That's perfect. I don't have, let's say, to run for this 100 risk redeem on a single trade, right? But obviously, you can decide for yourself that, oh, if I take it like this, and let's say the market will go to take profit, I will get 183. And that's correct. You will get 183. So basically, can I take the risk? So basically, I don't want to take a 106. Will I risk much more to get that 183? If your answer is right, take it. There is anything wrong with it, just take it. But don't be surprised if you get stopped out a lot. But when you will win more than me. There will be tons more than me. And that's actually right. But how many times you're gonna get stopped out trying to get this huge risk redeem amount? Obviously, you need just a try. I don't, let's say, convincing you to just lose even 15 trades in a row, even if you have the right bias. But when you win, you will win big. That's a way to manage your capital and your position management. I don't recommend you to. So whenever you find, let's say, a three candle formation, a structural point, just place it below here. I'll be fine. That's a protector structural point, lines up with a high time frame block. That's it. That's my POI. That's where I want to execute. I can refine it how many times I want. For example, you can take a statistical, refine it to the body. This is just on you. Refining to the body isn't much more correct than taking the tiny block. It's just a personal preference. They are all correct. But in the overall, the thing that matter is your understanding of the range. The position you're placing is just what will you risk. You'll find taking a 127, or just you'll feel much more safe taking a 106. For me, this already will give me tons of money. I will just take a 106. Obviously, if I bank a 129, I will be much more happy. Obviously, everyone will be much more happy if it makes more money. But will you be fine getting stepped out, getting your SL on your MetaTrader, even if your bias is right? Me personally, I don't like this. So that's the way I always do this. So let me check question real quick. So less than 2.5 SL, less than 2.5, you will get kicked out. Yeah, exactly. So always I use personally, since I'm running a funded account, so I had to deal spreads if I trade Forex. I will take personally anything less than 2 pips. Even let's say when I catch 1 minute confirmation. So let's say, for example, I have to catch this trade right here. So for example, double structure, that is this, that's T1, also followed by T2 into the POI. And let's say I want to take this three candle formation right here for somehow. I wouldn't take it if this, let's say something like this, like I wanted to. Even if this played out like this, I'll never take it. I'll always make it like 2 pips or even more. Let's say, for example, I'll take it personally like this. That's 2 pips, that's perfectly fine. Now, obviously, you have to deal also with hours. So, for example, let's say you want to trade Asia, you'll have to deal with bigger spreads, obviously. So you have to adjust it with your broker. Now, I'm actually doing a prop firm, the Nova founding I share you in the chat. And with 2 pip stop loss, I'm fine following my position management, right? So I will never go anything less than 2 pips. It's just a rule in my trading base system. Obviously, if you make 2.5, that's even better. You will get less risk, right? And that's basically it. That's the way you choose. Even for example, if I want to take this thing and I get stopped out, that's not because I lack the understanding of the strategy. This happens. That's liquidity. Market can just lead into liquidity. Will you risk to take it like this? Or let's say you will prefer to take it like this. Obviously, if you execute right here, you will have, let's say, highest probability that if you get tapped in, that will be a take profit, 100%. And if you take it like this, you might get stepped out. What will you risk? Don't think that trading isn't a business, because a lot of you think that a win is because market respect it, and that's correct. But let me explain. Trading is a business. So basically, you have to deal with wins and loss. At the end of the day, it's just what will you risk to take it from here. Your analysis matter, but at the end of the day, your analysis is this high will get taken, this low will hold. Why? Your trade management is just how much will you risk. Focus on it. Don't think about perfect risk redeem out. You can resize your risk management plan to whatever you want. Like for example, if I have to take this imbalance fill right here to actually take my trade out, I cannot risk, let's say, the 10%, that will be the 1% of my funded account on a single trade, right? I cannot take it because I know on the long run, I will get a lot of losing streaks, not because of me, but the way I choose to select POIs. Obviously, when I hit a win, I will just be done for, let's say, even months. But I have also to plan on how to deal on this consistent losing streak. Sometimes this will play out picture perfect, and I see this happening tons and tons of times. So let's say, for example, you take this hidden base right here. In this case, your setup played out. You will get a crazy risk redeem out of here. So will you be fine to, let's say, getting stopped out tons of time and getting a 111 onto the scenario? Obviously, this isn't realistic because you will get stopped out 100% of time on every single broker, right? Also because broker difference, but the important thing is the logic I'm telling you. Will you be fine to, let's say, take tons of losses, even if your bias is right, to just take this win that will cover, let's say, a lot your understanding of it, right? Because that's basically a 111. Me personally, if I have to take this setup, I will just take the whole imbalance field. To me, that's I wanted to. I wouldn't take it, but I can take it if my target is up here. That's what I will do, right? Now, you have to look for simple patterns. Whenever you go, I personally like to see ranges, not just going to, oh, that's QM, this is that as the liquidity. Because you're gonna get easily confused because let's say you take this range. You might see that's weekend information, QM on what time frame, and that's, let's say, a QM right here. You can say that's liquidity, that's liquidity, that's liquidity. So equal lows, trend line, you say, oh, price will come here. Price wouldn't come here. I can guarantee you that 90% of scenarios, price wouldn't come here. So you can take, let's say, you can do the opposite of having tight stop losses and execute on this on mitigate wick. But remember that to me, following experience, 1 out to 100 or even more examples, market will just do this, right? But when market will come, you will get a very nice trade. What would you risk of missing all of these trades? You see, at the end of the day, you never changed your understanding of ranges, but just your way to enter a trade. And I cannot change that. I cannot make you understand how I see a trade, my perspective, and my rules, right? And my rules are basically look and going for these two simple patterns that are T1 and T2. If you look at them, you will catch so many trades opportunity if you build an understanding. Look at this price block structure, retrace block structure once again. T1 equal lows, POI. Let's say I missed this trade because we all miss trades, right? It happens to all of us. So price block structure. What is this? Strong low. Take out liquidity block structure. Took out liquidity block structure. There is anything in the middle, what can happen? T1 or T2, right? In scenarios with internal range equity. So makes a low, fair swing, takes it. I will look for a long right here. Now in this scenario, it miss. And that's fine. I can understand why it miss. That happens. It's pretty much far away. I will see this area, but that's fine. Don't chase it. But if price takes out this high, that's a strong low in the way to go in this high. Price expand, makes a high, retrace, broke structure again. What is this low? T1. Closes PI, imbalance fill. You can take it like this, you can take it from the body, you can take the whole area. It doesn't change. It's your understanding, as you see. I'll personally take it like this, exit here or exit here. Would you risk to exit here for, let's say, a 107, let's say 106, or let's say 105, or would you prefer exiting right here to 110, including the scenarios that price can do this, or even come very close to your take profit and fail? Will you like it? Will you not like it? You need confidence. There is no way to build confidence without taking decisions. If you don't take decisions, you'll never be confident. That's not all in trading, that's pretty much on every single thing. Like, for example, this trade right here. I took a trade right here with my stop loss right here, targeting not only this low, but this high, following the bias. The main thing is not the overall move. Now, let's break this down. BOS, high, low. If price has to go up here, to me has no sense to come down there. That's already equal lows as I explained. And if my target is up here, what I said, I'll take the risk. I'll take it. I can decide, but what will be the safest decision to me? Wait, take it here. That's correct, but I understand if price comes here. It just means that I don't want to take it. I can even go on to multiple time frames. This won't change, right? That's the same range. I can change my perspective. Or this may look as liquidity. I don't care. Like, because in the overall, if I execute here, that's because I see a T1, right? But will I risk, let's say, the opinion of being wrong and get it stopped out even if my bias is right? Or I want to be stopped out, don't get tapped in, so don't get stopped out basically, and just miss the trade if my bias is right. This can be subjective on the scenarios you'll fill in. Exactly. You can take the whole block. That's a way. I will suggest you to do this. This will be the safest decisions ever. Now, the way I spotted, I think I was onto the 1 hour, no, 30 minutes, that will be. Yeah, 30 minute whole block. Liquidity to me is here. So basically, I refine it a step further. And I was lining up to all of this. You can take the block, but as you see, it doesn't change. You prefer to take it like this. I understand it. That's perfect. Personally, if I have, let's say, to recatch it for what I see onto this moment, I think I will wait to this area. Not because it just gets tapped in perfectly, but makes me feel safe with my stop loss right here. On the moment that I saw the trade, I refined it to this block, to basically to the whole area. Because remember, you're gonna take decisions also on the moment. So if this case, I saw this like this, I can lie to you guys and say, oh, I saw this, let's say to something like this and execute because, oh yeah, it's me. I saw the whole block. I took the risk right here. But maybe let's say onto a next day, I can just say, oh, I will prefer to take it like this. We all take choose on the scenario we are based in when we find, let's say, ourselves onto these hard scenarios. But the main thing is don't trade these scenarios. It's a daily look textbook because this to me is not what I consider high probable setup. That's not because, as you can see, price may come here, may come here, may come whatever. If you don't want to take a risk, don't take it. What's a high probable setup? Price broke structure, makes a high, retrace, broke structure again. T1. Closest PI to the liquidity, you may take the 50% of this breakout block. You might take the whole high time frame block. You might take this imbalance fill. Both correct, right? You can take whatever PI you want, but your analysis is not telling you the PI. Your analysis is telling you that's T1, that's inducement. You can enter even to liquidity. You can do it too, but you will have a lot of actually ranges, right? So I'm gonna do a little bit of QA, or you say, wow, a wick. I understand because I saw this. Yeah, that was a wick. I think that was this one, I think. Yeah, you see this key level going. You may take it however you want. And that's correct. So very nice spot. So I'm gonna go also over a little bit Q&A so you can now, yeah, unmute yourself, guys. So I'm also gonna read a little bit of the chat. So do you trade only with limit orders? Yep, only trade with limit orders. And that's the way I suggest you to trade because you can enter even manually. Like when we talk about, let's say, trades, I see a lot of traders, let's say, waiting for the manipulation. So let's say you wait this low as inducement to get taken. Wait a reaction. So for example, this is a lot of subjective. I cannot give you rules. So you have to see it in your way. Let's say you see price pushing up, you may wait a retest onto the first area you see. So for example, you're fine with that. You take it and you just adjust your stop loss like this. That's a way to end. I don't recommend, but let's say if you're fast and quick, so let's say price took this low and you enter onto this rejection, and you just see, oh, I'll place my trade right here. You can do it. But I don't like to do it because you have to have a lot of experience, to be honest. And if you begin with this way, you're gonna get stopped out tons and tons and tons of time. So the way you enter, find your POI, for example, that one, entry on the open SL on below, and wait. Place your buy limit, go for a walk, go do whatever you have to do throughout the day, and then you will see the result. That's the only way you're gonna build this. But if you don't want to take it like this, take a confirmation. You have a whole block, you have liquidity, and mitigated part. Enter here. But always use limit, on my opinion. You can also use, let's say, stop orders. The way I use stop orders will be the same as a confirmation entry to me. So for example, let's say you have a confirmation. Let's say, oh, price made this high. Again, see, this high is not a three candle formation, but we all understand that price made a low, a high, and another low. So if price takes this high out, will be that now the trend will change to bearish, to bullish. So basically to internal, to external. That's the same stuff, guys. So you can place your buy stop right here, stop loss below, and you'll go. Obviously, everything comes with different risk order, risk redeem, etc. So, because after BOS, a new range is created. Exactly. After every BOS, a new range is created. You cannot say that this day there was no setup. There is setup everywhere on every single time frame. But that doesn't mean that there isn't always a setup for you. I don't trade every day on my live account. I take 3 to 4 trades, honestly. But I see that there are a couple of trades. For example, all of these are trade, but which one I execute on my live account? That one. This one looks textbook. Yeah, but I saw that one. I feel confident to take that one. I cannot explain you why I saw this one and don't want to execute that one because this is my personal preference. You may like a thing, I may like another. But at the end of the day, if you take this one, is 100% right and the same of this one. Most of you, I know, you're not gonna like this one. It's not because I have so much understanding of it. That's not this way. That's basically my database and my experience because a lot of you like to trade T2 and not T1. I'm fine with that. Take it what you see. Trade what's obvious for your eyes. If you're stuck and you don't see here a T1, don't execute. No one is forcing you. Because if you take a stupid loss right here, because let's say market do this, or let's say come even lower and come, and you take a loss that you was forced because maybe you saw me and you think, oh, I have to trade a T1 like Nico said, but to you is something messy. Don't take it. This has to be, let's say, genuine to your own logic. If you don't understand it, you can train to understand it, obviously, but don't, let's say, force. If you need help, guys, I'm always here. I'm always to the chat, answer to you all. So let me actually get back to the thing. I'm confused with MKT, I think is minor time frame, minor time frame structure, and how to tie out with ranges on every time frame. Can you show how to do it in your chart? Of course. So every strategy, you name the SL, and yeah, even us. Remember, guys, we are not different. We are, let's say, something that people never see. We have our way of trading. You cannot find this way of trading or every others. We made this. You can't find T1 and T2, guys. It's impossible. And if you find this, that's because they study from us. Right. So even when we talk ranges and basically everything that we explained so far. So let's say you catch a trade right here following this breakout block. So now we said that every strategy has highs and lows every low, but where we have our stop loss in the long run. Let's say we want to swing. We have our target somewhere above here that isn't yet reached. Where is our stop loss? Right here. And when price, let's say, take this high out, when we move our stop loss here, that's the same. It doesn't change. It's pretty much around the low. Now, don't think the stop losses are a line. That's not the liquidity, but that's the most easy way that we can see liquidity. Because in reality, all the liquidity is here. Some above and some below. That's why price doesn't taps perfectly and leaves. We don't know where liquidity is at. So that's why sometimes when price, let's say, take the inducement, doesn't do something like this, becomes a little bit too wider. There are stop losses even built here. But at the end of the day, we are like retail traders. We all are retail. We are not institutional. We are all average people trading. So that's why we all have, let's say, no specific things to do. And also we sometimes fall with inducement because we are all peoples in reality. Volume profile, no. I will cover this even right now. I don't think volume profile is a nice idea where you trade to Forex because volume profile comes with volume data. My experience with volumes and my knowledge and understanding below it. Now, think I'm a price action trader. So I'm not, let's say, too in this volume stuff. I like price action because the volume is in the candles, right? When you do a volumetric analysis, you usually mean people that have external software like footprints, market prints, market extra data, and stuff. But you have to think, where do they download these data? Where do you get these data from? Onto the Forex, we have so many data. We have so many brokers. We have so many things that can actually give data. And where you actually, let's say, the volume profile for what I think, now correct me if I'm wrong, takes data only to the brokers, let's say, that you see onto this. So for example, if I use the volume profile here, we show me Oanda, or even if we explain every data, so let's say from the brokers, let's say that are on TradingView, this won't be enough. Because let's say you see there is tons of price action going on to, let's say, these levels right here. You have 1 orders, 5K orders, 4 orders, 100K orders, and 5 orders. Let's say something like that. Onto Forex. Think always we are onto Forex. And so your strategy tells you, oh, you have to enter on these datas because you have 100K orders. Obviously, I'm inventing everything, but I know some kind of strategy like this. So you want to enter here with your stop loss here because you get tons of datas. And bad market do this. And that's not a fail. Oh, maybe it can be a fail, right? Every strategy is not 100%. But now you see onto different software that this level right here, where you see only 4 little orders, has in reality 400 orders, 400K orders in reality, right? And that's why price came here, but you'll never know on your software. Maybe this is true, maybe this one is not, or maybe it's vice versa. You don't know where they get these data from. And that's why I don't like to do volumetric analysis. Because this will, let's say, maybe trick you. You don't understand all data. You can do it on futures because you have only a data, a central bank in Chicago where all the data are downloaded. You can do it and you will have much more accuracy. Now, I don't trust a lot, honestly, this thing. That's just my opinion. I do Forex and I'm a price action trader. By reality, you don't need volume because the volume is already here. I tried, I think, couple back in years, the volume profile. But basically, if let's say you point it, let's say from here to here, where will be most of data? Here. But why? Because you have simply more candles, basically more orders. It's easy to see. You don't, it's not, let's say, something so crazy. It's obvious that here there are much more orders. It's basically where market, let's say, come more time if you point it here to here. It's obvious to me. It's not gonna give you the POI. Most of traders use it to give a POI. To me, that's bullshit, honestly. It, it does make no sense. It's not his own purpose. But now we live on an area where, let's say, onto all this Forex education, people who teach, they are not traders. They just try to do weird stuff and they say, oh, this makes sense. Doesn't make sense at all. You see just a line And let's say you will think that this will be the case, but is way too obvious. I suggest you to try. You will find this level 100%, even if I'm not a volumetric trader. I understand where the volume is. But don't think that the market came here from this volume. It came here from this liquidity. That's what we studied. Right, so I hope that is nice. So let's say also covers question. What's the way you decide your direction for the day? Now, for this question, I made the video I uploaded today about my daily cycle. Now, this is 100% what I do and what I look for every single day. This will get you confluence, but that's not the main thing. You have to look always at your range. So, for example, first step, 1 hour forward range. So for example, let's say I have to trade Monday. So for example, when the market will open, where is my range? This low to this high, because we broke structure. Now I have only to think if this high will get taken or this low will get taken. The rest of the job will do session as explained to the video, right? So that's basically what I will look to following my schedule. So let's see. Talking about liquidity, do you consider important previous days low, high? Yeah, of course, they are liquidity. They are huge pools. Now, if you remember what I said in the beginning of the call, I said that you cannot, let's say, spot liquidity as all highs and lows because you're gonna get confused a lot. You cannot say, oh, this low is liquidity because it's just a wick. Now, through the course is mentioned the highs and lows on daily, weekly, monthly, they can be seen as liquidity pool. And I suggest you to do it. Simply because let's say we take a random high. Let's say blah blah blah, the one right here, for example. This one. Took it randomly. I don't have a reason why I took this high, but you're gonna see how price behaved. Let me just take a minor one so I can just go on to the 1 minute. So let's say this one randomly. See how price behaved down to the 1 minute. That's a way bigger scale, right? Daily to 1 minute, there are tons of time frames. Let's see how price behaved. The line, oh, that should be go to the 5 minute. That will be the same, right? That will be it. As you see, price gave the daily high and made a retracement. Now, this is something way too tinier compared to the daily. But if you trade, the say the 5-day 1 minute, price took out the liquidity and has a reason to make a pullback, right? So that's why we can use them, because if you have, let's say, to trade the 1 minute and you go to daily highs and lows, you will get a crazy reaction, right? So that will be at least an opportunity for a range. Let's say, for example, this high right here, you go to the 5. You follow me too. Yeah, perfectly. Took out the daily high and made a reaction. You can use them to tie up, let's say, liquidity and levels. That rules applies basically to every time frame. You can do even to the actual 5 minute. You can take a 5 minute candle if you want. It doesn't make the change because let's say price took out this high out until let's say the 5 seconds. Remember, 5 seconds. The same thing I did from the daily to the 5 minute will happen. Maybe price gave here inside a setup. Did he change something for our perspective? Absolutely not. Same thing if we do the same thing on the daily and we only trade the daily. We'll be able to cut the trade? Obviously not. That's why we can use macro time frame. I won't call them high time frame. They can be macro time frame. So basically daily highs and lows, weekly highs and lows, monthly highs and lows as liquidity. All right, that's the main way. Like for example, right here, let's say you are onto the 1 minute. You see these major swing points. That's also three candle formation onto the weekly. If you think that this is 1 minute, will you be able to take a trade onto this candle? Impossible. But if you scroll down onto the 15 minute, will you be able to take a trade? Yeah, tons of them. You will be able to take here, 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 and even all of them inside. Because you do a way consistent drop. But if you have to treat it like the 1 minute and you can't scroll down, you cannot take a trade. Right. So on TradingView, there is a tool for volume profile. Yeah, that's the thing I was mentioning about. You can find it even onto tons of software. But this thing is, let's say, you point it from here to here, will show you this level. Why? Because price tested this level tons of times. So there are chances that tons of traders enter to this level. Now, you don't have to see the market onto vertical lines. You have to see it by horizontal lines because there are levels that a person can enter. So for example, if you draw a line like this, people can enter here, 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 and here. So basically more option for people to enter. Instead, let's say, for example, here, that it was only here, 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 basically. So that's the main thing that the volume profile is made on TradingView. Anything, let's say, so incredible. It's just the thing I explained you. Simply group data on the little amount of data that it has. So
I got a question.
yeah,
Nico. I think it would be easier to talk instead of just type it out. But my question is basically, if you go on to the, let's say, 15 minute, and if you could put on your Asia range, that'd be great.
yeah,
So usually during London, I don't trade it because of this reason. I think New York is easier for me because there's more structure. But let's say like in your old Zoom, I think it was the 10/17 or 10/3.
yeah,
You said that after your Asia range is finished at 3 o'clock or 9 o'clock your time specifically,
yeah. 9 o'clock
there
my time.
is right, yeah, 9 o'clock your time. There's specifically the it approaches your POI or your liquidity target where you can take a trade. So my
Yeah.
question is basically after this big of a run during Asia, wouldn't you expect like how so like if this is my range, like run on liquidity break, run on liquidity break, how would you expect for this range to form here with all this equal lows, price activity, imbalance fill price actions? Like there's even these lows here. Like, why wouldn't you expect price to come down here? Is my question essentially.
All right.
I know the
So,
reason, but I wanted to see what your take on it is.
oh yeah. So now, let's say here is you cannot see it, but this is my 9 a.m. So that's my specific times right here. Now remember, isn't let's say like a clock. So basically, sometimes can happen a half later or even a half before. So basically, these, let's say, let me actually put on my London session and also all the stuff right here. So that's my London session. That's where it actually can happen, this kind of manipulation. So we already took out a high right here. This is liquidity. This is some external liquidity of a previous range, or you can even see it as sell side liquidity because that's basically, sorry, buy side liquidity because that's a high. So now you have a range. You have a low and a high. Well, as you said, remember, as I said about the paint, you cannot just go on a single time frame, so like for example, the 15-minute, and say that everything is liquidity. Because I understand that if you say, Nico, I limit you only to use these time frames. Where is liquidity for you? Oh, I can say here, here, and let's say here. These are the formal liquidity and see three kind of information, let's say equal lows or trend line, and a low. That's the liquidity I see. But when you tie up things, let's say you go to the 1 hour, what do you see? I see this low, this low. These may seem equal lows. That's the thing I saw. You may see them in different forms, right? I wouldn't call them equal lows onto these time frames because if I can check and see them on this perspective, yeah, they are equal lows to me because they're both three kind of formation. This pattern is much more easier for my eyes. I suggest you to begin with because basically the one I see the most, but you can definitely take them onto the 1 hour. If they make sense to you, that they are equal lows, definitely take them. Now see this in this way. If there is a gap, market doesn't have a reason to fill it. If there is no liquidity, obviously. Now, the main, let's say, module, range type I see, expand, retrace, broke structure. So that's my inducement. Where are stop losses being built for me is below this low and let's say all of these lows. But basically, from here to here, this gap is empty. Obviously, wouldn't be empty. Obviously, this doesn't mean there are zero stop losses. But for the way I trade the market, to me is empty. Right. So to me, if price has to come down here, needs a reason. That will be, let's say, if price take these blowouts, builds a failure swing for somehow, and will come down, market will take them all of them, and let's say come here. 100% will do it, and I will execute here 100%. But let's say if I have to tie up all the confluence that we have, so for example, how did Asia session closed? Asia session made a strong low. So my guy respected through the day. This can be even enough for me to expect this low to hold, if I have to be honest. And that's why I was so confident to actually take the setup, right? But not always price will just come and go up here. This might just be an obstacle, right? So if I have to take a trade and take the safest decision out there, exit here. Always. Because let's say if you are bearish, what market will do? Take out, let's say in sell side and buy side. Take out sell side, takes buy side, go for sell side. If you look to ranges, you will say, oh, price take out external, came back to internal, goes to external if you're bearish. But if you're bullish, what will do? It's just like this. So you can just say, oh, whatever, I win. And that's why you don't need a bias to actually be profitable. I didn't had a bias, I will be on profit on this trade because my bias will be which one will get taken. You can just be lazy in reality. You can just say, oh, I don't need a bias. Let's take safest decision out there. This one will be obviously sometimes you have to deal with less risk redeem, but that will be a choice for you. Will you like it, let's say, onto this scenario to take a 1 or 2? Me personally, no, but let's say we move this a step further. We go to the 1 minute time frame. So we go right here. I already broke this straight down, so that will be the trade, stop loss below the breaker block, and that will be the trade. Imagine catching a 105 that can has, let's say, 99 chance to go to take profit. You will definitely take it. That's so high probable. This is the best setup you can come and go through. So even if you get confused, whatever price will come down there or only here, this one you will take it. There is no point to don't take this setup, right? So if you saw the market to come, let's say, down here or even here, take it. But you're gonna see a price that doesn't have a reason. When you tie up everything, you understand why price came here, as you said, because you understand that my perspective is basically after I have a range, I have a T1, I tie up session, and basically I can no more get confused. Now, I don't always take the setups because basically you're not always gonna feel that you understand everything. Sometimes you just wanna don't trade because sometimes you'll say, oh, maybe this look like way too much liquidity because that can be days, that can be just sessions that you don't feel it. That's normal. That's average trading experience. So don't execute. But let's say if you saw this high being broken and then you have a T2, let's say Asia closed because let's say we don't trade Asia and Asia closed a strong low, breaking again structure, you can no more say, oh, price will come down there. You can because this is not gonna happen unless let's say there is some huge high impact news that will do something like this, but it's so low probable. But yeah, if you don't, let's say, And if you want to understand the price will come here. And honestly, I do this a lot. Now, let's say I have an example and I have to expect price to come down. I will expect always, as I said, the whole internal range liquidity to get taken. But if price forms a QM, taking out a protected structural point through this leg, I will target this 100% because I'll change my analysis. I'll be able to adapt and be flexible. And you'll have to go against a lot of it because that's basically your ego. That's you going against you. And because maybe you'll feel tricked, but sometimes it's just not. It's just the way you should to adapt. So,
Okay, that
and
makes sense. How about like so you said basically like here we had a run break and then we broke here one more time. So this would hold and then this would hold. And then this low and then there was this break but it didn't hold. And from what I was gathering from this low was going to be the T1 because there was like some sort of unmitigated area here. But would
exactly.
you have said that this would have held as well? Like what's your opinion on that? Like from this range to this range?
Oh,
Was there
let's
something that it came
say,
into here that it was strong enough
oh
to
yeah,
take out this?
it came into something. I'll show
Okay,
you.
thank you.
So let's say that's liquidity. Now, you know my way of, I don't know if you check in my way of seeing an obstacle, but basically equal highs, POI above, that will be, let's say, this imbalance field, or let's say this whole block onto the high time frame, right? So that will be my main obstacle. You can refine it. That will be just it to me. So that was the area price came into. Now, if let's say I miss a trade right here for somehow, and that's no obstacle, I can take it here, honestly. There is anything wrong with it. But if I count an obstacle, I can expect a bigger reaction. And if I have to look to the structure, let's also understand what happened here. That's a strong low, but why is a strong low? Asia failed to take out this high. And even if it broke, that was a T1 because never came into anything. Whenever perspective you see it, that's a trap in all scenarios. So that's a strong low. And price came up here. Now, this low didn't do anything into the structure. We can see it even onto multiple time frames. You go to the 5, no liquidity, right? There is no liquidity inside of here. And to me, a QM is no liquidity. So it goes to the 5, anything. So basically, this low doesn't have anything to do with here. And if I have to take a setup, I will expect, let's say, a tissue directly. But if it breaks, that's T1. In all every scenarios that can happen, that's a trap. Now, in this scenario, hold it to come to the obstacle. I understand it honestly, but I didn't take it because on my mind, when price already took out the high out, it can drop. I wouldn't take, let's say, a trade onto the trap. Will make me just a nonsense trade. But just because it played out, you may find yourself saying, oh, this was textbook because that's T1. Yeah, obviously that's a T1. But onto the higher time frame, that's a trap. So to me, it's just don't take it. That's not a good idea for you. So that's why I'll never count it as a protected low. Now you might get tricked about seeing this QM, right? Because our way for seeing, let's say, T1 is this way, right? That's how we see T1. But remember, every time price changes its direction, what prints QM. Go throughout the course, rewatch it. You'll notice that every time price watch his direction will actually form a QM. So if we have to break this down, let's say onto a more detailed way, you'll find T1 like this. We can go and check it out. That's a low, that's a high, that's a QM, and the broke structure. Same thing, textbook. That's why we are so confident. Everything that happens every single day in the market is textbook for us. Basically, everywhere is textbook. The only thing that changed is our perspective. Right. I hope that makes sense to you.
It did. Thank you so much.
Perfect. So, do you trade gold? I don't trade gold, honestly, but I can recommend it. Like I see tons of traders that say, "Oh, you want to be profitable? Don't trade gold." That isn't not true. If you see, if you hear something say something like this, just don't hear it. It's basically it doesn't know how to trade. Every pair is the same. Even let's say if you go on gold, yeah, yeah, I was expecting price coming up here. It's basically the same. You can do every single scenario. Yeah, it acts in the same way. Price, let's say, where is your target? Let's say somewhere up here. Obviously, I don't have an analysis, so don't take my words. It's just we'll be doing. Why price came here? Price makes a low, a high, retrace, broke structure. As I said, if there is a target up here, for example, I'll definitely take her here. That's why it's playing out. Everything that I explained does work, but it's not working because it's me. It's because there is a logic behind. That's the logic we all explain every single day. That's what it does. But let's say you don't take it because you have fear. It's normal having fear sometimes. So took out liquidity BOS, takes out also a major structural point. Now, this is a reentry, takes out a major structural point, retrace broke structure once again. If here is empty, you might take a trade here. Broke structure makes the QM, failure swing, imbalance fill. Take it. It works on every single pair. You can go whatever. Exactly. Logic XK. Now, BTC, but when it talks about crypto, I don't do analysis. I don't recommend you doing analysis on crypto market. You can do on every kind of market. So, for example, futures, Forex, I suggest use these two types. They work basically on the same, and also commodities like gold, since are commodities. The only way I don't do analysis on cryptos are basically because there are no rules. Let's say if this is a crypto, tomorrow can just do this, a minus 99% in a matter of seconds. There is anything stopping price to do, because if a crypto, let's say, die, we don't change our life. It's basically, oh, it died. Let's go to another. It never, let's say, change the whole economy. Doesn't change anything. So there are no rules to me. Now I see some traders trade crypto with ranges. That's fine. That's not, I don't like it, and I don't recommend you to, because Forex cannot do, let's say, a drop of minus 99 in a second or even in a day. There are rules. If you check and you study a little bit of economy, the market cannot, let's say, change and behaves onto, let's say, the way he wants. He cannot do certain levels. And for example, the euro against the dollar cannot, let's say, move above or below a certain level, right? Because we'll basically will fall the whole wide economy. So that's why I prefer to actually trade it, because that feels manipulated. Is manipulated to don't fall and go to these levels. That's manipulated. So that will mean, let's say, institutional banks, big players has interest in it. This cannot, let's say, do something like this, because it's proven so many times that when you go into a crypto pair on a crypto market, all people say, oh, this is a stable coin. And then in the next 6-12 months, it fails because there is a liquidity, and who owns the project will say, you know what, I'm just going to take the money. So basically going to close all the trades, and you're going to be a lot on drawdown, honestly. But that's why I don't suggest it. I lost, yeah, exactly. That's why you lost 21K. Company stock, I don't never check it. Don't think is a good idea. So if you want to understand which market to trade, Forex futures, go all in there basically. I recommend you Forex. I trade only EURUSD. That's the pair I focus 100% of the time. And if not, I trade to GU, and Audi is just here because it's just a personal preference. And I never traded since I think 2 years, basically. Or I think, yeah, sometimes you'll see me take a trade here, but it's just because I feel annoyed most of the time. But yeah, if I don't trade you, you will see me on GU, but 99% of the day, you. That's the one I recommend. Not because you work better with ranges, or you has this that other pair don't have. Every pair is the same. Every market is the same, on my experience. So ranges work in the same way. Like for example, I explain you gold working the same way. All ranges works. There is no limit. The main reason I choose euro is basically when you go for a prop firm, usually euro is the pair that has less spread. So basically, it convinced me to trade it, right? And that's the one I will check it the most because has usually a lot of data because it's considered a major. When you open your MetaTrader, tons of brokers do this. They actually divide pairs by major, minor, and exotic. So go always with major one. This sometimes will depend on the broker data because sometimes you'll see, for example, some brokers allow GBP, JPY as an equal measure, but some not. For example, other implement USD, JPY, but all has Euro USD and GBP USD. So if you have to check two pairs, choose them. 100% suggested. So yeah, also US30, if you have to look to NAS, futures, I like NAS, US30, and I think, yeah, basically all of them. That's the only two I traded. So how do you decide that today I want to trade you? Oh, I go over always you. So I don't even decide. But let's say if the trade is particularly hard for my mind. So basically, I struggle a lot what to see. I will just, let's say, change pair. But this will be a desperate choice, if I have to be honest. And that's why it never happens. We expect next week. Yeah, that will be potentially this high to get taken. I have to take a decision. That's ABOS. We are in a bullish structure. This high will get taken. Take the decision. As I said, if you see the market is bearish because Mai came into summer, take that short. Take the decision. I don't have the fear to, like, say, explain my bias from. That's what I see. That's why I gather longs. I all exited my trade, and even if the market takes out this low, I already took out my trades. I already bank a profit. You see, you don't need bias. So that's a lie if you think that, oh, I'm not profitable because I lack of bias. No, because even if this doesn't play out, I already banked my profit. You don't need it. Take smartest choice, always, guys. So,
Hey Nico, can you go to Nas real quick?
oh yeah, that will be
Nas
the
100.
last thing. Oh, let me check. Let's see, hundreds. That will be on two futures. Let me check
It's
on
under
gold.
all.
So yeah, let me check. Yeah.
Okay, so
Oh yeah.
how would you like, let me just annotate it real quick. How would you like long it with all this imbalance? Like the day opens and then it just goes up without like any retracement back to these daily levels. Like my question is like, how would you expect we made a swing high right here to a swing low, no retracement to the mean, but there's no reason to retrace.
Yeah.
Like it
There is
just
even no reason
reacted.
to come here.
Yeah. So like how would you like trade it with this type of market? That's the reason why I switched to like Forex because this thing just moves up without any retracements.
Now, the thing you'll feel when you trade futures, something like NAS, US30, sometimes even on gold, it's just you're always on a way too high time frames. Like, for example, because you have to deal with tons of data, basically because a candle, let's say this way tiny candle, is not tiny, because in reality, it has over 380 levels. That's a lot of levels inside of a tiny candle. This on EU will just be, even if it is 4 hours, something like 20 pips. So basically 20 levels. And that's why you feel, because you have tons of data and you have to be analyzed where price came. So whenever, even if you are on the 1 minute and market comes here, because you don't seeing data. So that's a thing I don't like from futures, but obviously if you can go over multiple time frames, you can do, like, it's not the thing that is not making you profitable, honestly. But you can trade it, will just be, I think, much more harder, but definitely you can take it. Like, for example, let's see right here, that's strong low, that's a high, that's a low, broke structure. Now you have to understand what happened inside, right? If this is a strong low, will hold. Now, Asia close right here. You are on a bullish market structure. You can expect this to get taken because that's not a strong low, Asia. So I think that, yeah, that happened. Take it and go. Or even, let's say this didn't get taken for somehow, BOS, even onto a major point, re-entry. And this week will be used as liquidity until lower time frame. So always take it day by day. But yeah, that sucks because doesn't give reentries. Because let's say you miss this move, you never get any trade onto the 15-minute, but you should go to the seconds to expect a trade. Now, the reason is simple. Why didn't give any kind of pullback? So let's think this is the 1 minute. What you have here is tons of liquidity, right? You have all of these highs, trendline traders, smart money traders, all in one. So market takes out a high, what is resting above here, liquidity. External buy side liquidity, same stuff. So whenever price takes out a type of liquidity, go for the other. So if takes external, has to go for internal. Market has no reason to come here since it's empty. Let's say you go to the 4-hour, no reason to counter. The target was up there, and as explained, that's a T1. So I will definitely long here. That's my way to trade. That's the pattern I see. That's a T1. That's BOS, retrace BOS once again. That's the trap, right? So market then that this, fulfill his target, pullback, book structure once again. So again, you need a bias too. Yeah, I was expecting, yeah, this high definitely to get taken, whatever it is, because let's say you don't know your bias. Again, you don't know your bias. Always put yourself in the worst perspective possible. You don't have a bias. You don't know if this high or this low get taken. Now, onto futures is easier because you're basically all bullish in reality. So basically, you go to US 30, was bullish for last time I checked, it was 2020. Now, I think that was a drop following the COVID economy, blah, blah, blah. But in reality, they are all bullish. So that can be, you don't have basically a high time frame bias because in the overall, 99% of them are going to be bullish in the overall. So let's say you are bearish. For example, you have an idea that the market is bearish. You have internal range equity, you have a PI. If is the 1 minute, how price came into that PI? Straight. We like it? Not at all, because let's say you have a PI, you don't want to get up in here like this. You'll prefer, let's say, inducement and get taken, right? So if I'm bearish, I will expect this. So this high to get taken. Remember, that's so important. If I'm bullish, what market will do? Oh, that's obstacle, retrace, and will get taken. On every scenario possible, I win because this high will get taken. That's so easy for me because I put myself onto, oh, I win or I win. And that's how you can do it too. If I didn't have a bias, like for example, right now, I think, yeah, again, doing mentorship, asking me my bias on this. I said, this high will get taken. That's the cleanest thing I can do. Because on every scenario possible, this will get taken. Sometimes this will, let's say, not happen. I will do this. It doesn't matter. Take a decision. Take a decision. Always, this will build your confidence. Can you come over selection of PI for trade entry? Most likely will go bearish, inducement, first swing. Yeah. Let's see. So you can please look at over the selection of PI trade for entry. So yeah, that will be last thing. So let's see. Also, I hope I answer your question, Nick.
Yeah, you did
So,
fantastic, Nico. Appreciate you, man.
oh, don't worry about it. So let's think, for example, every PI to me comes with a key level. Let's say, for example, that's T2 range or whatever if it's T1. In the overall, that's the liquidity. That's the only liquidity we do have, right? Which one is the closest liquidity onto this time frame? Imbalance fill, right? I'll never remove this line, right? Will always be right here. We go to the 30-minute. What this is lines up with? Imbalance fill, but it's different. But the level is still here, never change. I'm onto the 1 hour. In this case, we have this unmitigated wick. So I'm gonna make it black. I go to the 4 hour. This is just a big wick. All right. Now, what makes the difference between this black line and this blue line? Anything. In just which one will you select? Honestly, I will check this blue line because it's closest to liquidity. And I can afford having the stop loss here. This is just a refinement. because in reality, your stop loss will be trailed down there. But you'll never take it. You're gonna take it like this. When you select the right POI, you will feel the key level is going to be always on the same level. That's why I was able for more than a year and a half to just enter on key levels, because they're gonna never move. Let's say, for example, right here, closest POI to this inducement, 50% of this breaker is much more closer than this imbalance fill, that is three kind of formation, and basically everything. 30 minutes, this is just, yeah, basically a breaker block onto another time frame perspective. 1 hour, again, 4 hour, that's a wick, right? A wick right here. You can enter, let's say, to this level, or just enter whatever you want. I will personally enter right here to just don't miss a trade, and that's what makes sense to me to enter a trade, basically. But again, that's basically your key level. And also, all of this, that's a block, right? So it doesn't change at all. Sometimes the actual key level will be the same onto every time frame. Sometimes we'll just change by, let's say, a little pip. You're not gonna miss trades for this. So it's not gonna do this. So let's say, for example, this thing. Well, this one is the closest PI to the liquidity, right? Onto the 1 hour, that's a three candle formation. That's basically high. But let's say 4 hour, what is this? Imbalance fill. You go to the 2 hour for somehow. That's imbalance fill. It's different, but it's on the same way. You go to the 1 hour, three candle formation. That's nice. 30 minutes. That's basically a breaker block. But you will see it much more clear until the 15 minute. Why? Because price broke structure on the lower time frame. People want to go short, failed. But again, where is the key level here? Where you have the right actual eye and level, you will only see level. Now, this is important. Remember what I explained you. The paint, you'll never change the paint. The paint is still like this. You can only change your perspective, but in reality, is showing you this. This thing never changed, but I changed a lot my perspective, but the range was the same. That's why it's so important. So yeah, this is called absolute target. This is what I call the absolute target. The high and low should go in every possible scenario. It was targeting me. Yeah. So that's the best thing I can actually listen. So always target, obvious target. If you don't want a bias, or sometimes I just feel lazy to do an analysis because I just don't want to risk and say, let's find obvious target. Go for it. You know, let's say you're not gonna be someone going to you say, oh, you didn't go for a nice 1 to 10 every day. No one cares. Just take what's obvious for you. Right. So I hope I actually replied to most of your questions, and that will be helpful to you. Also, on the next day, I'm gonna upload some more backtest videos, so you're gonna see how you apply onto different scenarios. I'm gonna do tons of backtest session because I want to give you guys as much value as possible, because if you see me doing tons of backtests, you'll see how I behave and how my mind thinks on different scenarios on a huge database of data. And that's why I'm providing constantly tons of content, etc. And that will be tons of content soon. So don't worry about it. So that's it for the call of today. I'll upload recording soon until I download. So have a great day or have a good night. Bye guys.